QE, or money printing, begins again. The U.S. Treasury Secretary just told you interest rates need to go down, mortgage interest rates need to go down, and we are going to buy back bonds with printed money to make sure everyone understands that we mean business. So if the Treasury means business with printing money, that's quantitative easing, except it's done by the Treasury. What does this mean for Bitcoin? Well, Bitcoin's up 5%, so you might be able to guess from there, but do you know the details? Do you know what's really going on here? I'll give you a hint. Scott Bessent used to work for George Soros's big hedge fund. He knows how to get everybody off balance, everyone talking about rate hikes and associated nonsense. Right before he comes in and bam, hits the market with something unbelievably bullish, because effectively QE has restarted, because there's no such thing as a little money printing. No, we're just going to do a little. We're just going to do a little bit of printing, which, by the way, also helps the dollar fall and the yen rise, keeping in mind that Uncle Scotty was also involved directly in the market with the Bank of Japan, trying to make the dollar go down so the yen can go up. When Uncle Scotty says the dollar is going down and the yen is going up, when Uncle Scotty says that long-term interest rates need to go down, so we need to buy bonds and have the bonds go up, right? Scotty is pushing money into the system. The Fed takes the bonds and pushes the money into the financial system. That's what QE, or quantitative easing, is. Wait a minute. Is that the word liquidity that I hear all over Instagram and TikTok? Bitcoin needs liquidity. Bitcoin needs liquidity. Some guy told me Bitcoin is not going to get any liquidity until 2028. I mean, a secondhand source. Somebody said we're not going to get any real liquidity. And of course, we heard that you don't really have to be long Bitcoin until October. Right. When everyone thinks it's October, it's now. Why? Because Uncle Scotty means business. The housing market is locked. Mortgage rates are rising. There's no bid for long-term U.S. government bonds. There's no bid for anybody's bonds. Hyperscalers, AI, we covered this yesterday. The biggest problem in the world right now, perhaps other than diesel and the price of diesel, is the fact that you have gigantic entities who need trillions of dollars every quarter competing. And bond markets going, we're done. No, we're not doing this. So what has to happen? Uncle Sugar or Uncle Scotty has to come in and say, okay, you need to sell bonds? No problem. We'll just take them. So first they were buying back $15 billion worth of bonds. Then they announced today that they're going to do $30 billion of bond buybacks. New word. Not QE. It's not QE. It's a buyback, where we take the bonds and flood the system with money. Just 30 billion. Well, first it was just 15 billion. That's just 30. That's just like I'm going to have a little sugar. I'm only going to have one Dorito. I'm going to have one Chips Ahoy cookie. Right. Let me just get one of those French fries. No. You see what I'm saying? This never ends. Once they start the sugar, once they start supporting the bond markets, they never stop. And how did you know it's coming? Like, don't tell me they didn't know it was coming, right? Nvidia comes out before their earnings, tries to get as much money as possible, okay? Knowing Uncle Scotty will be there. BlackRock told you yesterday. Yeah, you should have 2% of your portfolio in long bonds. Excuse me. BlackRock comes out yesterday and says you should have 2% of your money in Bitcoin. What a coincidence. What a coincidence that BlackRock comes out on Twitter with that statement the day before Uncle Scotty and the Treasury pushes the print button. Amazing. This roughly 2 weeks after, or maybe 10 days after, Fidelity comes back and makes an odd statement in support of Ethereum by saying, you know what? We want to stake our Ethereum from our ETH ETFs. Oh, what do you know? We did a live stream where we said, in a world where AI agents are slinging money around at science fiction speeds, the crypto assets that do well are the ones that have an incentive to hold it so that it doesn't get devalued by all the flying around. Well, ETH, proof of stake. Remember when this was a bad thing? Yeah, guess what? It's going to be the only thing going forward. And by the way, all the treasuries and all the stable coins and all that stuff that's on ETH, guess what? That's going to start moving around on ETH, and the incentive to hold and stake ETH will create incentives and a bid, because as activity picks up, the new issuance of ETH falls. So as the cryptocurrency world reboots itself 3 months before everyone else thinks it should, where's resistance in ETH? Oh, don't wait. Don't worry. We're going to get the chart and you're going to have a laugh, because you know what? All of these goofballs who thought it was going to go down, Bitcoin was going to go to 40K. Guess what? They're not going to want to pay 2K for ETH because Tom Lee's an idiot. We're going to go over that PowerPoint from a couple weeks ago. We're going to go over some of this stuff. We're going to have a little laugh at everyone's expense, because Bitcoin up 5% is pretty good. That's fine. Okay. But we discussed yesterday that, where the real resistance is, and it's way above 68K, way above there. 5%, Bitcoin up 5% shows a complete misunderstanding as to what's really going on here. So what's really going on? And oddly, no real bid in Nasdaq, because in the stock market, they know why Uncle Scotty came in, because guys are in trouble over there. They borrowed too much money. AI is going to change the whole world. It already is, but their big constraint is financial, and they are too big to fail. So Uncle Scotty's got to come in with the printer. Here's the laughability of all this. People thought that the way to stop the long-term interest rates from rising and long-term bonds from going down was to have the Fed show that they were super tough on interest rates, super tough on inflation, and actually raise interest rates in an attempt to impress the long-term bond market. These odds of the Fed hiking rates with zero labor market growth. Yeah, earnings are breaking out. Corporations are making tons of money, because of AI and other productivity increases, but it doesn't require any more people. Matter of fact, you could argue the labor market is horrendous. The government came out with a cybersecurity certificate that would lead to a job, 15,000 applications. Meta puts out a training program for, carpenters, laborers, electricians. They had to shut the application process down. Like 25,000 people applied. There's no labor market growth. Why do you think the Fed has said nothing? Nothing. The Fed, this Kevin Warsh, has said nothing other than he doesn't like inflation. Why? Because he knows Uncle Scotty has got his finger on the print button. He can't do it because the Fed can't print in an inflation environment where you have price pressure from oil. So who's got to do it? Oh, the guy who used to work for Soros. People don't understand that Soros, before he became, kind of a political weirdo, was the hedge fund guy that would have huge positions. And if sovereigns were doing something stupid, he would just take positions and he would break it himself. He would just break it. If sovereigns did something stupid, he would take advantage of it, have huge positions, and get famous doing it. This is where Scotty got his education. So, you've heard of FAFO. Scotty's skipping the FA, and he's going right to find out in terms of the amount of money that he's putting in the system. Right now, it's only $15 billion extra. Okay. So it's not a lot of money. It's not, $85 billion a month that Bernanke and those characters did for years. However, it has a massive symbolic meaning, meaning they're not going to tolerate any more increases in U.S. rates. They're not going to tolerate any more puking in long bonds. That's it. We're not tolerating. We're not tolerating more yen downside, more dollar up, yen down. That's it. Not doing it. And that's the Bitcoin part. If you're wondering, that's the Bitcoin part. That's what starts the next bull market. It's not the amount of money that they're doing. It's their attitude. Their attitude, because this doesn't require an act of Congress. This doesn't require anything from the president. This requires nothing except Scotty exercising his power as the guy in charge of the Treasury to say, yeah, we're going to buy back bonds. We're going to buy back bonds. The Fed doesn't have to do anything. The Fed just has to sit there, which is exactly what they're going to do. They're going to sit there until something happens, and maybe they have to join in. Because as we discussed yesterday, there's a reason for all this. They didn't just wake up and said, yeah, let's print. The Fed's probably getting phone calls from Wall Street banks, from, guys like Nvidia and OpenAI say, listen, we can't not be able to borrow money. And they can't. They're what's driving the whole U.S. economy. It's too big to fail. So, this for crypto is unbelievable. The AI agent economy is already off and running. So any cryptocurrency or any digital asset, which, oh, by the way, we went through 10 of them in the YouTube member area in a podcast only watched by our members, you might want to check it out. Because there are crypto assets that are going to benefit from this AI agent economy that is now being goosed by Uncle Scotty. Interested? Check it out. And then, of course, there's the research that we put in Patreon about this debt crisis. And, of course, we're going to be hitting that with, oh, my God, are we going to be hitting that in the next week? And then there's alpha intelligence calling the bottom in the bond market and showing that there is no resistance in Bitcoin. We covered this last night. After this bottom in the bond market, this guy who made this thing says this system, this little indicator system, will help you get the news before the news. We've been talking about it for 3 days. I've been calling him and showing it to him in the Discord. Everyone's talking about it. The bottoming signals in the bond market when everybody was bearish U.S. bonds. Everybody thought interest rates were going higher. Everybody was bearish bonds. Everybody said Bitcoin was dead. We said, hell no. Hell no. So much so that we had Lego videos. We had Lego videos of me and Toby basically telling you that it was not over. And in a true stroke of irony, the video ends with a God candle going right through the Treasury and the Fed. Whoops, there we go. God candle, anyone? We're not messing around because Uncle Scotty is not messing around. We'll go over the Bitcoin charts. We're going to go over everything. And of course, last night we discussed how precious metals. There's no resistance in precious metals. None. None. You know what I'm saying? Absolutely none. M12345 says November, December, January, 45K bottom. Enjoy being exit liquidity. Okay, this is a good point. So Bitcoin breaks a trend line, it goes up. No one believes it. Good. Good. You know, everyone hates the market. Good. You know, and the thing that is even funnier, it just hit just now. Remember I said it's kind of stupid that the Fed would try to impress long bonds? Well, they're actually doing it now. They're saying they will hike rates if inflation doesn't fall. Now, to me, what that means is when they're announcing that today, they're essentially saying we are not going to tolerate any more. We're not going to tolerate a rise in long-term interest rates because it's going to completely destroy housing. Destroy. I mean, you can't. Only people over the age of 45 can buy a house now. And no one's going to believe this. That's fine. I didn't believe or understand QE in 2009. I didn't understand it. No one did. But you better understand this because first they came in to try to stop the dollar from going up. Now they're coming in to try to stop long-term interest rates and that whole market from imploding from government and private sector borrowing. If anybody has ever read the Bitcoin Standard or any Bitcoin book, this is why they invented Bitcoin, to like bring this home. I mean, there's, I don't know, we could probably do this with, I don't know, maybe we could do it with 2 charts, 3 charts. You know, the first chart is simple. And, you know, they maybe don't have the software, but don't kid yourself. Okay. You have lower lows in long bonds. This is the 30-year bond. This is what Scotty is buying back. This is how they're doing QE Lite. The government's buying these long-term bonds or longer-term bonds. Let's put it that way. And they're telling you they don't want these things going down anymore. You have lower lows in price, higher lows in RSI, and multiple bottoming signals from alpha intelligence. On the Bitcoin 1-hour chart, you know, I know it stopped at 69, but I don't see any resistance until 71. Bitcoin ETF. IBIT. I don't know. It's right now it's at 39 and then I don't know, 42 or 44. Like this whole selling climax down here. What was that about again? I don't remember. Oh, the ETH ETF, which is of course a joke. There's no resistance. There's no like the real big volume from Alpha Intelligence is at 24. It's currently at 15. And there's minor volume resistance at 17 and 18. Now, you're probably asking yourself, why are we looking at the Bitcoin and Ethereum ETF? Well, just go back to BlackRock yesterday. Go back to what they said. They told you, right? BlackRock believes allocating 1 to 2% to Bitcoin will improve long-term portfolio returns. So how exactly do you get the 1 to 2% Bitcoin exposure? Oh, you buy the BlackRock Bitcoin ETF, their most profitable product. There's no resistance. There's nothing from a TA point of view that's going to stop Bitcoin for a while. If for no other reason, people need to fully understand what Uncle Scotty is saying and why he's saying it. Why is he saying it? Because obviously the US government and what they have to do to fight a geopolitical situation, which frankly looks grim, And this hyperscaler thing, which frankly is even more important. Do you realize they need $1 trillion next quarter, these characters? $1 trillion next quarter. Not next year, next quarter. It's unbelievable. I don't know. I saw some statistic we're paying like $3 billion a day in interest. I mean, you can't do this forever without somebody coming to the rescue. And Uncle Scotty, being a hedge fund guy, he knows from the days of what they would call intervention. Like if the Fed didn't like, or the Bundesbank or the ECB or the Bank of England didn't like what was going on in the currency market. Like, for example, if something was going up and they didn't think it was orderly, you know, if something was moving too fast, they would come in. If it was going up too much, they would sell. Not a lot. They would just sell. They would tell the market to knock it off. If the market didn't knock it off, they would come in heavy. The Bundesbank came in. Oh my God. Currency traders in the 90s. If you saw Bundesbank says or Bundesbank intervenes, we were more afraid of the Bundesbank than we were of the Fed. Like if they said it, you better do it. And if you look at this, you know, I mean, Alpha Intelligence told you this was not going below 58. It told you there was support at 62, and this trend line break was extremely clear, and there's no real resistance. This is the main Bitcoin futures contract. I mean, I don't know. I mean, you know, daily charts really aren't good for tactical trading necessarily. They occasionally are, like that bond market chart. But I mean, where was all the big selling volume? At 95K? Who the hell wants to talk about that? No one wants to talk about that. They were talking about crypto being dead on YouTube 2 weeks ago. Not even 2 weeks ago. Not even 2 weeks ago. Like a week ago. Dead, really. When people finally understand what this means, see, right now it's this. Treasury doubles debt buyback as Bessent moves to steady bond market. It doesn't read as QE. Bitcoin odds of hitting 70 this month rise to 72% after pumping 7%. These were the same characters who thought it was going to 50, and to make it to enhance the unbelievable nature of the economy. Here's Mike doing a video of himself in freezing water in Oregon, trying to build a dam with the beavers to, I don't know, to get more energy for Bitcoin or whatever. Even Mike was upset. There was nobody that wasn't depressed. Nobody. And yes, Grandpa Keeter is hammering away with lizard emojis. Our lizard emojis are coming. I've seen the draft. They're everywhere. You know, less than 10% of the population is invested in cryptocurrency. A little breaking news from the Eagle King. And the number of U.S. home buyers falls to the lowest level on records. And Citibank is launching Bitcoin custody for institutional clients. Oh, it's very convenient. Hey, you know, we're launching Bitcoin custody. Oh, how strange is that? Wow. Citibank announces an institutional, I mean, they've obviously been working on it, but what an amazingly convenient announcement date. Do you think these guys were in on this? Of course they were. They absolutely were. Bitcoin glides through the trend line. No one believes it. Uncle Scotty comes out with a major statement that no one understands because, again, they're making a statement. You know, he's using the power of his reputation to move the market. And then, of course, there is a host of cryptocurrency news related to the SEC. Grayscale getting a Zcash ETF. SEC coming out with a framework for digital assets. They didn't do the Clarity Act, so the SEC kept coming out with these constructive crypto headlines, right? Oh, yeah, we're going to help crypto. We're going to help crypto. We're going to help crypto. That's why when that BlackRock thing hit yesterday, I'm like, oh my God. You don't think these guys watch these trend lines? You don't think these guys see this stuff? Think again. Think again. They know exactly what they're doing. Exactly what they're doing. You know, nobody, gold is up today, but this to me, like this is the 4-hour chart of gold and like the real, on a 4-hour chart, like the bigger level on Alpha Intelligence is like, I don't know, 4,600. I'm having, let this calculate. I don't know where the big levels are in gold. Oh, look at the big levels are at 5,400. There's a small level at 5,000, which will obviously be a psychological point, but the big volume was up at the top. So let's do it this way. What happens if this thing spikes right back to its top? You know what I'm saying? Like, what happens if all that volume, acts as a magnet? Silver is the same thing. By the way, look at silver on this 4-hour chart. August 18th, 2,200 hours. Boom. All this volume comes in. Who do you think that was? Guessing smart money. Guessing very smart money. They're going to be screaming like banshees. Let's just humor ourselves and see what they got going on in gold stocks. Little live TA style. So it's probably, yeah. So XAU, this is an options index for gold stocks. Look at all this volume down here, man. They've been buying this for 3 days. More than that. They've been buying this for a week. Not surprising. It breaks out, makes the return move, and then boom. This is everywhere. They've been everywhere for days. And it's been on this thing. It's been everywhere. Oh my God, look at this. See, here's how the Fed tells you to buy Bitcoin. Here's how they do it. They don't tell you to buy Bitcoin. This is breaking now from the Eagle King. Federal Reserve says U.S. stock valuations are near dot-com bubble levels. In other words, you guys are out of control. You borrowed all this money, and now we have to bail you out. Like when you see that, this is a bailout. It's not just a print job, it's a bailout. And of course, that won't be the first headline because, journalism majors and economists and everyone else has to figure this out. This is a bailout. It's a bailout of Uncle Sugar, and it's a bailout of the hyperscalers done subtly, which is why people don't understand it, which is why Bitcoin, Bitcoin up. What is Bitcoin up right now? 1:30 p.m. Central Time on a breaking market update. Bitcoin up 5%. So what? So what? Are you kidding? I mean, we have all forgotten the way Bitcoin and all these cryptocurrencies and ETH's up 8%. So what? Who cares? ETH's at 2,000. Ooh. Oh my God. I don't know if I can pay 2,000 for Ethereum. think I'm starting to make fun of people now. I better be careful. Because there's a lot of people out there that need to get made fun of. Starting with Benjamin Cohn and this whole thing about, the whole reason the market went down. The whole reason the market went down was because the market didn't get the rate cuts that it wanted. And I know they're going to say it was in the 4-year cycle window. I know that's what they're going to say. And they're not wrong. Okay. So yeah, ETH's up 8%. Who cares? Who cares? This is ETH weekly. When ETH decides to go up, it just smokes. Just absolutely smokes. This is 2025. This is not 2021. This is 2025 when ETH went to 4,000. This is ETH in 2024 when ETH went vertical from this level to 4,000. Is Tom Lee out of his mind? You remember this? We talked about this. I did a short video on Tom Lee on YouTube. It did so bad I had to pull it. 10,000 Ethereum puts Ethereum at a $1 trillion ecosystem, which is what Bitcoin is today. Tom said 9,000 to 12,000 by the end of this year. 62,000 by 2030. Is Tom Lee right? Now, can you imagine what is going to happen when Tom Lee hits the tape? Saylor is going to be out there, now that he's done playing with the beavers in the river. He's going to be out there. There was a sell signal in STRC. Guess what? It didn't work. Didn't work. STRC held just fine. Nvidia rolled over, but STRC held. So is it an overall credit crisis? Does Michael Saylor need to be bailed out by the Treasury? I don't think so. Matter of fact, Bitcoin and STRC did not need a Treasury bailout, but the hyperscalers did. And Bitcoin's up 5%, and everyone's going to go, oh, don't buy it. Don't do it. Yeah, you didn't do it before, but now it's through a trend line, and Uncle Sugar is telling you to buy it. BlackRock is telling you to buy it. Fidelity had something positive to say about Ethereum, and the Fed just told you stocks are out of control. The Fed is telling you that we don't want to have to make this a bigger bailout. In other words, get control of yourselves. Don't have this be another Korea, another KOSPI. And you're like, well, what's KOSPI? Well, that's when an entire country, especially younger men, in an attempt to buy an engagement ring and get a house so they can have a family, resorted to gambling in chip stocks in South Korea, levered, uber levered, and they got smoked. They got smoked. Chip stocks rolled over, and it was a country-wide margin call. Okay. I think you get the point. And if you don't get the point, watch the price action. You will. You will. Okay. Let's see what we got going on here. Oh, and by the way, YouTube member area, Patreon, Spartans. Time to come home. You know what I'm saying? It's on now. It's on. Now if I wind up Billy Bulltard again, fine. I'm rolling with Scott Bessent. I'm going to roll with the ex-Soros guy. Come get me. Come get me. You want to challenge these guys? Good luck. This is a financial Normandy landing. We have screwed up on geopolitics. We have screwed up in the bond markets. We have screwed up on hyperscaler debt. There's not having this. They're not going to have their legacy be some complete nuke. The Fed's telling you to knock it off, and Scotty is like, okay, I'm going to make sure this doesn't go bad. So they're doing carrot and stick live while putting liquidity in the market. Okay. Moonwell. By request. I have a feeling that give up trades are going to unwind themselves. This should have been the bottom in Moonwell, and it wasn't, because they needed to force everyone out on a give up trade, which resulted in a marginal higher low in stochastics. And you have to begin to ask yourself, in digital assets, what digital asset fosters credit? No, we did this on a stream. We just gave you the coins on the YouTube member VIP podcast. Like, we explained that when AI agents start moving around, there is going to be a certain key to how a currency is valued. Like, what cryptocurrencies do you pile into? What cryptocurrencies do you get rid of? So if it has a burn mechanism and destroys supply, if it has a verification or you get paid per check or per transaction, if you have a locking mechanism that reduces the float, or if you have a mechanism where the coin or the coin has an ecosystem for collateral. In other words, when money starts moving fast, think of it like taxi cabs. You know, if you had 100 people who needed a ride per day and a taxi could only do one ride per day, you need 100 taxi cabs. If you develop super fast taxi cabs that can do 50 trips in one day, you only need 2 taxi cabs. The faster money moves around, the less of it you need. In crypto terms, right? The faster money moves around, the less the supply is worth. You need less money, less supply, less pressure on the token to go up. Crazy, right? Not really. I mean, market cap in crypto is what people hold. It's the value that it holds, not the value that moves around. So as things move around, how do you get paid when things move around? Well, like I said, collateral, locks, burns, staking. If people hold it and you have that supply reduction with activity like ETH, the faster the agents move, the less supply there is, the higher it goes. Solana has to increase fees. ETH has to tweak the staking rewards. There is a proposal from ETH. It may not go through, but there is a proposal on ETH to marginally shrink what the stakers get in order to have ETH actually be deflationary when these AI agents go berserk. So you have AI agents ready to go crazy, with Uncle Scotty going, we're not tolerating any more selling in our bond market. And we're going to push money in the system. We went from 15 to 30 billion. And how high do you think he's willing to go? The reputation of a guy who used to work for George Soros. Like, you want to talk about play around and find out? Like, the market doesn't get this yet, but it will. It's going to. And, you know, we may have to just follow Bitcoin up. But you know what? The fact that Bitcoin is not up 25% today, I consider that good, because you know what? If it was up 25% today, the guy in the comments who said your exit liquidity, he could be right. It could be a bear market rally if it's up 25%. But if it methodically goes through a trend line and then massive news comes out and no one believes it and it's up like 4 or 5%, because you can go up 4 to 5% and 4 to 5% gradually, then suddenly is bullish, particularly when there's no resistance and nobody can see that, but you can with alpha intelligence. I told the guy, you know, this guy is really pumped up for good reason. This is a good thing, right? But he's really pumped up. He's like, Bill, you got to tell people that you procured them a special discount. I did procure you a special discount. But when this thing starts, when the volatility picks up, you're going to buy it with or without the discount. But I got it for you anyway. The bond market, the great Scott Bessent bond market bottom, televised right here. Marian from Ohio sent a high five. Thank you with 100 joules. I appreciate that. Thank you. We're so back. We actually made the decision to never leave, which, by the way, for 10 months, just, well, the pain. The pain of it all. The pain of it all. But you see, now it's gonna pay off because everybody now has to like recompute. Everybody has to recompute, right? Like this whole thing about Rectember. I was a little bit afraid of Rectember. But then I said to myself, wait a minute. Is Rectember in the bond market? And you know what? I was right. That's why Scotty came in like this out of nowhere. You know, you got Nvidia earnings in a couple of days. You know, if Scotty hadn't done this and they had popped the hood on those earnings and all that, you know, all that hootenanny that's going on, all that off-balance sheet financing that we discussed ad nauseum last night, it's roaches everywhere. Where there's one roach, there's a million. These guys, these hyperscalers know. They cannot afford to lose the race. They're going to spend any amount of money. They don't care. They don't care about they don't care about the shareholders. They don't care about the bondholders. They know that if they don't win, they disappear. They're done. Especially in technology, it's winner take all. It's actually worse than what happened with railroads back in the 1800s, which, by the way, resulted in a giant investment bank blowing up, which Uncle Scotty also doesn't want. They don't want this. They're like, it's better to do something small and symbolic now than have to go ask Congress or have the Fed having to print money when inflation is still a problem. I mean, they're going to look at this and they're going to go, this is an act of genius. First, you do the dollar yen thing and no one believes it. Everyone fades it. Then they're going to do this and, the reaction is meh. They're making a statement. They're making a statement. Let's take a brief moment to review what happens when they make a statement, particularly in something like the dollar. The last time they made a statement like this is, of course, a little bit more subtle than what happened in 1985. But they're basically telling you that they mean business. And the last time everyone got together and said the dollar is too strong and the dollar has to go down was 1985, the Plaza Accord. This is a quarterly bar charts. Quarterly. Straight down. Okay. .com bubble, recession, dollar, straight down. Things happen in threes. 1, 2, 3. See ya. As I like to say on the stream, you've been told. You've been told. They told you what they want. They told you what they're going to do. The SEC is going to support crypto. The Fed says equities are out of control. What asset class does that leave you with? Oh my God. What? Do they have to come out and say, hey, buy Bitcoin? Do they have to do that? Matter of fact, when they did that last time, it was actually bearish when the orange man came out and said some of this stuff. It was bearish, unfortunately. Now, it's more subtle. it's more powerful. And, you know, the United States as the crypto capital of the world, you know, is a realistic thing if they get the Clarity Act going, which of course is not in the headlines. And now with Bitcoin going up, even if they didn't want to do it, now they have to do it. See, when they had Bitcoin going lower, that was Jamie Dimon and friends when they were leaning on it, trying to discourage everybody from the Clarity Act. But if they get FOMO going to 75K, when they come home from summer vacation, they're going to have to do it. They're going to need the crypto bro vote. You know, you have this incredible polarity, right? You have the way far right and the way far left. Things just, you know, things have gone, they're going the other way. Normally everybody moves to the center. They're going farther in the other direction. The crypto bro vote matters. And if Bitcoin's going up, anybody in Congress who rains on the parade is going to be seen as a bad guy if Bitcoin is going up. And it's not, again, it's not just Bitcoin, right? It's ETH. It's all this stuff. Like, you know, could you even, like, we came out with the velocity of money. Jordy Visser, the guy I used to work with, started talking about the velocity of money. And I said, well, wait a minute. That sounds like it belongs in crypto. Like, you know, which coins benefit from the velocity of money? How about Solana? Big volume order block in the past. That's what the purple means. So, you know, okay, we're going to take a break. You know, this is where the Solana give up trade started from, but you know, the big order blocks are at 87 and 90 on a 4-hour chart. You believe they took XRP below $1? Now, they have to get their act together. Ripple has to get their act together and come up with some sort of reason to stake XRP, because the fact that XRP is fast money doesn't necessarily make it better than Ethereum. Let's put it that way. But look at the alpha intelligence buy signals in XRP. I didn't even see this on the daily chart. There was a cluster of 3 of them. I mean, folks, every once in a while, you have to take your TA and revamp it. Just revamp it. You have to come up with something new. I mean, I went from DeMark that I had been using since 2004. I flat out canceled it. I just said, I'm going to force myself to learn something else. And then somebody knocks on my door with this. And you say what you want, but this is working, right? Stuff's coming off, support, discount zones, dead zones. This is giving you the when, and it's giving you some kind of tactical, you know, obviously we covered some 1-hour charts last night. We covered the tactical read. I mean, you could probably sit here and double click on charts all day long, and you're going to trip over a chart that has an alpha intelligence buy signal right before this thing launches itself into space. Because again, you know, you start looking at I am just going offhand. You know, I'm looking at, you know, SUI is up 5%. I don't know if SUI has a mechanism like ETH or Solana for staking. Let me go to another watch list. Somebody brought up the Moderna chart. They have a cancer breakthrough. Well, look at this. Just out of curiosity. Do you think they knew about this thing? It's up 147%. Look at this. Do you think they knew? The buy signal was on the 7th. The volume in this area is huge. You know, I don't think it's terrible to say that you can get the news before the news. You know, there's a guy named Magic Internet Money who says, show me the chart and I'll show you the news. You know, someone's got to get a leg up on BlackRock. Somebody has to. Otherwise, you're going to get run over, to be honest. And again, when you start bringing in, you know, when you start, like we can go to like a tactical read just to see where Bitcoin is. See, here's the thing that's funny about Bitcoin. If we're looking at the 1 hour chart, I'm having trouble. This is the futures contract, right? So basically it makes it so that I make sure I get as much volume as I can. It's the big contract. Really, there was no reason for this to stop until it got to 71K. So I really don't know what the market is doing at 68. I can only conclude disbelief. The market doesn't believe it. Yes, Grandpa Keter says, yes, we are doing, yes. So here's how Alpha Intelligence is going to work on the channel. Instead of just hitting you with a bunch of education right away, we're going to be showing it on the stream, and then I'm going to do something on Fridays where me and the Alpha Intelligence guys are going to go over this live. Like he's been, like I look at it, I go back to the teacher, he explains it to me, I ask questions, like I'm studying it and I'm learning it. So you're going to be sitting in on one of those sessions live. Then after I learn it, we're going to have advanced training or training in Patreon and in the YouTube member area first and foremost. He's already agreed to do that. My idea was just like, we knew volatility was coming. Let's just get it on the air. Let's get it on the air. You know, and then we can do the education. You can watch me get educated before we give you education. Before we lecture you, you can watch me learn it live. That's what I decided to do. Because what should we do? Should we all sit around and wait for something to happen? Hell no. Hell no. I mean, Uncle Scotty coming in like this. I mean, I would not have guessed that. Not. I would not. I mean, I knew the hyperscaler thing was a problem, right? And I thought it was going to have to get much worse before anybody did anything about it. Now, if you start looking at ETFs tactically, okay, so there is a reason why the Ethereum ETF stopped here at 16. Okay, but, you know, again, that's not a huge order block. The bigger order block is up here at 17 at the top of a gap. So if they don't want to do it today, oh, please, gentlemen, I'm fine with that. The longer it takes, the better. The more disbelief there is, the better. Great. I'm exit liquidity. Okay, fine. You know, if Bitcoin gets slammed in October or November, okay. I mean, what happens if they take it up to 75 and the return move is back to 68 or even 62? You know what I'm saying? Like, I can tell you this because it's in our forecast in Patreon that the move up was going to be a lot more volatile than anyone could tolerate. So maybe both me and Exit Liquidity Guy are right. Maybe everyone's right. Maybe we're going to go from no volatility to insane volatility. Volatility that you just can't tolerate. Like maybe that's how they get everybody out or keep everybody out. Like, you know, what happens if Bitcoin ETF goes up to 41 and then goes back to 37 and you just have all this wild action? That is not impossible. Matter of fact, it's likely according to our forecast. Our forecast had a close above 66 and change and Katie bar the door. That was without Uncle Scotty. What more do you want? You move through resistance with the government saying, we're not tolerating this. We're not tolerating the nonsense in the hyperscaler bond market. We're not tolerating trashing the Treasury bond market and knock it off in equities. Just knock it off. We don't need any leveraged margin baby blow up over here that you had in Korea. Knock it off. In other words, switch asset classes. You don't think the Fed, you don't think these guys saw what happened in Korea and are like, oh my God, you got $1 trillion in margin debt in the United States against $1 trillion, the public borrowing against stocks. That's why the Fed is coming in and saying, knock it off. Knock it off. Now, I don't know if that creates a crash in Nasdaq, but what it does is it kind of rugs the bid or rugs the enthusiasm. In other words, if the Fed comes out and says, knock it off, without the Uncle Scotty intervention, that can cause a major down move because that sounds like the Fed's going to tighten to stop it, which did happen in the dot-com bubble. As a matter of fact, the ECB was so annoyed with the dot-com bubble that they were hiking rates after it rolled over and it looked like it was going to fall apart. They gave you a little kick in the groin when you were down. That's how upset they were about that party. They are telling you to switch asset classes. They are telling you that they do not want a margin blow up in stocks. It's probably why stocks are stable but not down. The plunge protection team is here to stop a calamity, not give you margin money to run out into the economy, bid up prices, and create inflation. Two things create inflation: the Nvidia economy, the leveraged Nvidia economy, and what's going on with oil. The Fed can't stop oil, but the Fed does not want, any more euphoria, and it doesn't want a KOSPI. And for anybody who doesn't know what happened in KOSPI, KOSPI is a Korean stock index that is primarily dominated by Samsung and one other chip company that I don't always pronounce correctly. Regardless, KOSPI went straight up. I mean, people got into this chip thing a little late. Like, the Fed does not want this. Like, this doesn't look like much, but this index in 6 months went from 3,000, 4,000 to 8,000. So the index doubled and then crashes 50% in like a week or a month, with everybody, all the smart money liquidating to all the margin babies at the top. People got destroyed. Like in stock, in crypto, when you get liquidated, your account just disappears. In equities, you can get liquidated. And if you get liquidated at an unfavorable price, you can actually wind up owing the brokerage company money, especially if you were over-levered. So if you're over-levered and they can't execute your liquidation, you can owe the brokerage company money. Just total destruction. People just wiped out. 30-year-olds, 35-year-olds. Like, really sad stuff. It's sad enough over here as it is because there's two economies. Again, another reason for Bitcoin. Another reason for me to look at this 40K crowd and go, what are you looking at? What are you looking at? Okay. Yeah, the 4-year cycle, the Fed's too tight, the chart sucks. Fine. Okay, I got it. You guys were the contrarian kings for 9 months. But what's the case for lower prices? Everyone's all sold out. You're telling me it's going to get more depressing? Okay, Nasdaq could completely melt down. Okay, in an E-word year with an event in November, really? I mean, yeah, there is a case for Rectember. There's still a case for Rectember. There's still a case for excessive volatility, which is why Scotty came in now. That's why Scotty came in now. Crypto Princess Media in the house. The person who had the 4-year cycle thing before anyone else. And by the way, it was a more likable explanation than it was for Benjamin Cohen, who just made fun of his audience, whereas Princess actually explained it to people. Explained it to people. You should follow her. Right? It's actually good analysis, London style. It's good stuff. Right? And thank God, we may not be doing 40K because Uncle Scotty is not playing around. Like if you see him on talk shows and you see some dimwit reporter trying to challenge him, good luck with that. Going to chew you up and spit you out. These guys are not playing around. And he knows what happens. I may have forgotten this. These guys know what happens if it gets out of control. He does. Because when he worked for Soros, their job was to make it get out of control so that there would be this huge blow up and they would make gazillions. Now they're on the other side of it. And we're like, no. This is not happening. Don't even think about it. Don't even think about it. You know, everybody wants the big short. Everybody wants the hyperscalers to blow up, blah, 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 blah. Sure would be an interesting trade, but everyone's watched the movies and that's an old story. If there's going to be a meltdown, it's going to be a melt up. Something's going to go up. If it's not Bitcoin or crypto, it's going to be gold and silver. Something is going to vent the pressure in the system. And if you have the AI agent economy starting to move, that changes economics in favor of crypto. So yeah, they're not putting a lot of liquidity in the market, but they're putting enough to change psychology. And the fact that psychology is changing slowly is constructive, as I know. I'm repeating myself. Okay. To state the obvious, you should be listening to Toby Ward, who has been telling you about the agent economy, the rails of the internet of the future, which is currently featured on our Lego video on Twitter so that people get it. The rails of the future. Patreon had a TA forecast where 66K was the level, and when you broke through that, it's on, and it is on. It's going to be extremely volatile. Like it goes up, everybody goes, you know what? That's the end. No bottom. It's going to go down. Everyone's going to be like, I told you so. It's garbage. And then it's going to go up again, and this is the new normal. Like you can expect these 5 to 10% moves in either direction. That's the forecast. Like extreme volatility, welcome to it. Everybody was complaining there's no volatility. Well, guess what? You got volatility. Now, I would not be shocked to see this thing go from 70, go to 72 or 74, and then back down to 62. And then up to 80. Like a series of higher lows. Hopefully this word doesn't hurt me, but violently. Violently. Because this is a response to a crisis before it's a crisis. John Legend, welcoming John Legend to the stream. A big Princess fan. Zapatas, first on the stream. MJ Hits, Mojo, 955925. Kevin Hawthorne, good afternoon from Lakeline, Florida. Miguel. Leroy, 2010. The Jeski, a Spartan Colonel, a member for a year. Gary, a member, thank you. along with Zepedas. Grandpa Keeter. Real-world assets can collateralize digital assets on internet computer protocol, currently trading at $2.22. Exactly. The digital asset universe is destroyed. Get Alpha Intelligence so you can check out your coin to see what it's doing on the 1 hour, 4 hour, and 1 day chart. You can try it for $7 for 7 days. Judge, jury, and synthesizer. Thought on the federal green grass laws. I think if a doctor thinks it's okay, you should do it. So if a doctor says you need it, then you should be able to get it. And to a certain reasonable degree, if you need it like any other medicine, you should be able to get medicine. Nobody should tell you what medicine you need. You should decide. Tutorial on Alpha Intelligence coming soon. Nice to see a green day, says Noah. Princess in the house. Haven Peck. John Legend. Welcome. Mojo 5925. MRCR. Beam is up. Scotty, love it. Glad to see you too. We covered XRP. Boy, that looked like it was over, huh? That chart was broken. Our model said the chart was broken. And I was like, you know what? When the charts are all broken, I didn't say this, but I thought it. I was like, you know what? When all the charts are broken, when all the humans are broken, when everybody is just so depressed, when it just looked over, it looked absolutely over. It didn't look like it was going to bottom in October. It looked like it was never going to bottom ever. The Federal Reserve and the United States Treasury just told you how things are going to go. Can sovereigns still screw up anyway? Absolutely. But if you want to pick a fight with Scott Bessent, I wish you well. Good luck with that. That is the market update for today. We will see you tomorrow.